All right, good evening, everyone. Hope that you're having a great night or late afternoon, or I guess it depends where you are. My name is Tyler Ballhorn. I'm the owner of Stockscores.com. I've been a trader for 30 years now. I've been teaching people how to trade my approach for 20 years, and tonight I'm going to show you the process that I use to search for stock investing opportunities. So this is not geared toward short-term trading, day trading, swing trading. Tonight's presentation will instead be focused on longer-term trading, something we call position trading, and then very long-term trading, which I just call investing. And so whether you want to hold a stock for a few weeks or months or even years, the processes that I show you tonight and some of the information I give you will be useful for that. If you do have an interest in shorter-term trading, like day trading, swing trading, I'll be doing some other webinars over the next month or so, and some of those will touch on that topic. All right, so let's get into the itinerary for this evening. First, I will talk a little bit about the theory behind the stock scores approach, how I pick stocks, and what is the theoretical base for why it works. We'll then go into the different types of investor strategies that I use and which strategy is right for which kind of trader. I will show you the Stockscores Education Center, which is behind the password protected area of Stockscores. So many of you may not have seen that before. And so I will give you a little tour of that. We'll then use the Market Scan tool to search for opportunities. I'll describe what the Market Scan tool is for, how it works, and then we'll actually do some scanning to see if we can find some trading opportunities. I'll highlight some of the future events that we have coming. I have some more webinars over the next 4 to 6 weeks, as well as some live presentations in Calgary and Vancouver. Haven't done those for a few years, so I'm going to get out and meet some of you face-to-face again in those cities anyway. I'll talk about how you can learn my approach, and then at the end, if you have any questions about stocks that you own or are considering purchasing, then you can ask me about those stocks and I'll give you my analysis of them. All right, let's get into it then. The theory behind the stock scores approach. So let's begin with what stock price is based on. In the strictly theoretical sense, stock price is based on the present value of future earnings expectations. So companies are in the business to make money, and the value of the company is what determines what the company is worth. Or the earnings, the future earnings of the company is what determines what the company is worth. So for example, for a very long time, the most profitable company in the world has been Apple. They make about $60 billion per year. Recently, Saudi Aramco went public. That company makes about $110, $111 billion per year. So that's the new heavyweight champion for earnings. And so when we think about value of a company, we're really thinking about what is the earnings potential of the company. And it's not enough to say what will the company make next year, but also what is it going to make the following year, the year after that, the year after that. And in that regard, growth becomes important. And so some stocks will trade at a multiple of 8 times their earnings. So like banking stocks, more boring conservative type companies might trade 6 to 10 times their earnings. Whereas a high growth company could trade at 40 or 50 times earnings. Some companies don't even make money. You may have heard about the recent IPO of Lyft, which is the rideshare company. They lose money every year, but still they have a $25 billion market cap, despite the fact that they will lose $1 billion this year. So why would investors pay for a company like Lyft? Because the expectation is that sometime down the road, the company will make money, and stock price is based on all of the future earnings going out, 20, 30 years, really infinite number of years, and discounting those back to today. And so the job of the stock market is really to figure out what those future earnings will be. And it's a guess. Now, for a company like Microsoft, it's a easier guess to make than for a biotech company that is trying to get their first drug approved. Obviously, Microsoft has a number of different products, and analysts can say, well, we know that they tend to sell this many packages of, the operating system, Windows operating system, and this many versions of the Microsoft Office package, or Apple, they know that they'll probably sell this many iPhones next quarter. It's a guess, but they're pretty good at predicting these things because they have some history. And so the job of the stock market is to make that guess and to figure out what these companies are worth. And really what's going on every day in the market is people are making their guess. They are casting their vote for whether they think the stock is worth more or worth less. When you sell a stock, you're really saying that you think the stock is worth less, that it will go down in the future. That's why you sell it. On the other hand, if you buy the stock, you believe that the stock will go up in the future and that it is undervalued today. Now, of course, for every transaction in the stock market, there's a buyer and there's a seller. One of them thinks that the stock is going to go up, and one of them thinks that the stock is going to go down, and one of them is wrong. And our job as investors is to try and be the one on the right side, the one who has correctly evaluated the valuation of the stock. So, why do stocks go up? Well, stocks go up in the strictest theoretical sense because the earnings ability of the company improves. If we think about that biotech company that is developing a new cure for some disease, if they have a good result in some clinical trials, testing with patients of that treatment, then those results really indicate that the company has improved their ability to make money in the future. If an oil company is pumping out 5,000 barrels a day of oil and the price of oil goes down, then their ability to make money also goes down. On the other hand, if that company that has 5,000 barrels of oil in daily production has a new discovery that will add 500 more barrels of oil of daily production, then you would think that their stock would go up by some, fraction of what they've improved their earnings, perhaps 10% in the case of a company going from 5,000 barrels a day to 5,500 barrels a day. So it's all about information. And as the market gets new information about a company's ability to make money in the future, it will adjust price up or down. And the job of the stock market is to have that argument. So information is key. Now here's the catch. The stock market is not fair. Some people get better information than others. Some people, armed with their better information, have an advantage over the rest of us because they know things that most of us don't know. Now, who are those people? Well, of course, at the company, there are the insiders, those who know much better how products are selling, how services are selling, how new products are being developed. Anyone that's within the company has some information advantage. Now, for those people to trade on that information is illegal. That's trading on inside information. But it happens, and if nothing else, sometimes people close to those insiders will get that better information. But I think the bigger source of inside information is not really inside information, it's well-researched information. If you are a large hedge fund and you're managing $20 billion, you can afford to hire experts in the biotech field or insiders, people that know a lot about the oil and gas industry. And through the resources that you have, you can probably uncover information that is not widely known and therefore make better investment decisions. Now, what happens is when these people that have better information know something that's really important. Let's say the stock that they're analyzing is trading at $10 a share, and they uncover some information that makes them believe that that stock really is worth $20 a share. But most of the market doesn't know this information yet, so that stock is trading at around $10 a share. Now, it might go up 50 cents, might go down 50 cents, but it's more or less around that $10 share mark. Well, imagine you're the large hedge fund and you've got $20 billion that has to be invested. And you do some really great research and you say, you know what, ABC Mining Corp is not worth $10 a share. We think it's worth $20 a share. And so we're going to go out and buy $50 million worth of the stock. Now, in the context of having a $20 billion fund, $50 billion isn't a lot. $50 million, sorry, isn't a lot. But the impact that that $50 million share purchase will have on share price is significant. Because if the stock's trading at $10 and someone comes in and wants to buy $50 million worth of the stock, they can't do that in 5 minutes. They might have to accumulate that position over days or weeks or maybe even months if the position is large enough. And so what will happen then is they'll come in and they'll start buying the stock aggressively, and they're going to be willing to pay more than $10 a share. They might be willing to pay $11, $12, $13 a share. Because they have better information, they're willing to pay more than most people. And in the process of filling that large order to buy shares, they are going to create abnormal trading activity in the market. And what I have done over the last 30 years is looked for abnormal trading activity. And I created an indicator that looks for that using math. It's called the Stockscores action candle. And what it does is looks for statistically significant trading action. We look at price, we look at volume, we compare it with past history, and we look for things that don't make any sense, that aren't flukes. You know, that $10 stock to move up 50 cents or down 50 cents may not be that abnormal, but to move up $1, well, that might be quite abnormal. And you can't simply say, I want to look for the stocks that are up 10% or more, because every stock has a different threshold for what is abnormal. And that's what the Stockscores action candle does, is it uses some sophisticated analysis to look for what is significant for that stock. Not what is significant for any old stock, but what is specifically significant for that stock. And when we see it, we know that there is an opportunity. Now, I will tell you that almost every stock that does really well, that goes up for weeks, months, years, almost always starts their upward trend with abnormal activity. And therefore, the Stockscores action candle will almost always trigger early in the stocks that are going to go into strong upward trends. However, not all action candles lead to market-beating trends. It's our first filter, but we have to do some other things. And so we have to learn how to gauge the supply and demand for the stock by looking at stock charts. We have to look at the patterns that are forming on stock charts to assess the reliability of the entry signal. We have to do good risk management, because even the best indicator will be wrong some of the time, and so we have to have a plan for what to do when the signal that we got was wrong, so that we minimize our losses. We have to have a strategy for when to exit so that we can lock in as much of the gain as possible, but at the same time not watching a winner turn into a loser. And when we have those winners, we want to have a strategy to maximize the profit on those winners by adding to the position. And so the reality is maybe 20% of the stocks that we trade will become really big winners. The big winners are where we make our money. And if we can add to those positions, once we have been proven right, once our analysis has been proven correct, then we should add to those positions using something called scaling strategies. So those are some of the things that I teach in the different courses that we provide. We have online learning for these things, because it's not enough to have the abnormal activity. We also have to use these other considerations to really identify the best opportunities. So just go through a couple of examples of what I mean here. So this is a stock listed on the Toronto Stock Exchange, Village Farms International, and it made, whoops, oh, sorry, this isn't going to work. Anyway, I'm going to have to draw with my other tool here. I usually draw with my finger, but I've set things up a little differently and it's not letting me. So let me just redo this here. Get my mouse back. Hold on a moment. Okay. Okay, so where my cursor is right there. Hopefully you can see that okay, where my cursor is moving around. That was the day that the stock made an action candle. It had statistically significant price action, statistically significant volume, and it had the right kind of pattern. And so that was the day that applying these basic rules was a good time to get in. And you can see that the stock went up very nicely. Looks like about 400% from the close on that day to the highs, from $6 to $24. That would be, I would say, a more aggressive trading opportunity, one that maybe isn't appropriate for someone trying to just put 10 conservative stocks in their retirement portfolio. This is more for the trader, but still, over a relatively short period of time, perhaps 8 to 10 weeks, the stock gained 400%, and it all started with the action candle. For someone a little more conservative, maybe looking for dividend yield, that sort of thing, this is the kind of company that we're interested in. And again, where my cursor is, there was some abnormal activity. And again, from the right kind of pattern. That pattern there is called a cup and handle pattern. And again, a relatively conservative stock, TransAlta Corp, listed in the Canadian market, Toronto, went from, the $8 range to $10, 25% gain for a investment grade stock that would be great in a retirement portfolio. All right, so what are some of the different strategies and approaches to looking for opportunities? Well, to answer that question, we really have to think about how much time you have available, your risk tolerance, and what your interests are. Do you like sitting on the computer for an hour a day looking for trading opportunities? If yes, you're going to apply a very different strategy than the person who doesn't want to do an hour a day. Maybe they only want to do 20 or 30 minutes on the weekend to manage their portfolio. So how much time do you have? What are your interests? And what is your risk tolerance? The person with, $1 million to invest will have a different risk profile than someone that has $10,000 to invest. The person that is in retirement already is looking to preserve capital, looking for income, looking for dividend yield, that sort of thing. Whereas, a 24-year-old can take more risks, can look for more growth. And so we have different strategies for those different types of profiles. And what we're going to do is go into the education center where I can show you the theory that you learn and the lessons. So let's jump into Stockscores website. And I'm going to go into trader training. And again, this is something where you have to be a member to look at this. So if you're not a member, you probably have not seen this before, but I'll give you a little tour. So this is called the Education Center. Now, there are some areas of the Education Center that are free. This Getting Started area has about a dozen different videos, and you can look at those videos no cost. You want to learn a little bit about the Stockscores approach, the Stockscores indicators, charting basics, how to actually execute a trade if you've never done that before, how the market scanner works, that sort of thing. You can all do that in the Getting Started area. Once you're ready to start learning my approach, you have to have a theoretical base first. And so I teach, again, maybe a dozen different modules here on chart pattern reading, price channels, risk management, scaling in. Remember, we talked about scaling earlier. You can see some of the topics there. Each module has a lesson, which is a written component, where you can read about the different aspects of that topic. And then there is, a video that you can watch. So I can click on this, and it'll play for me a 30-minute video on that particular topic. And it's me just presenting a presentation that goes through the different key components of that lesson. And then the final two areas are the assignment, where you can practice the concepts of that lesson, and then you can take a multiple choice test to make sure that you understood those concepts. So that's the theory. What we're going to focus on now, though, is the more important strategies. And so I'll just explain what these strategies are for and who they're for. So we've got 6 different investor strategies. The Stockscores Simple Daily strategy is for the person that can put some research time in on the evenings. They don't have to do it every day, but if they want to do it every day, they can, because it will generate new opportunities on a regular basis, where if you do your market scans every day, you'll find new opportunities. There's always lots. And the anticipated hold period there is maybe 2 weeks to 2 or 3 months. The risk profile, I would say, is moderate risk, not really low, but certainly not high, like day or swing trading, where you don't have to deal with a lot of volatility. And it takes 20 to 30 minutes. If you want to do it daily, great. If you want to do it once in a while, great. But you should be prepared to spend 5 minutes a day to at least check your holdings to see if there's any kind of a sell signal. Now, the Stockscores simple weekly strategy is very similar from a theoretical standpoint, but it lengthens the time frame. So instead of looking at your market scans daily, you would do it once a week. And again, you don't have to do it every week, but if you want to look for an opportunity, then you would do it on the weekends typically, or Fridays or whatever. You can actually do it any time, but I recommend doing it Friday, Saturday, that sort of thing. The abnormal break strategy is more short-term, more aggressive. It looks for stocks that are kind of making abnormal moves today and might make a quick pop over the next week to 2 weeks. You can do that strategy in the evenings. It's probably best to do it in the final hour of the trading day. The process will take you 15 or 20 minutes. And so if you have 15 or 20 minutes, half an hour before the close, that's the ideal situation. But again, you can do it in the evenings as well. Stockscores Simple ETF is a longer-term, more conservative strategy. Bottom fishing strategy is one that we use after the market has corrected. We don't really use it most of the time, but for example, in January, after the market had corrected, that strategy yielded a lot of good opportunities. And then the Stockscores Action Break strategy is another fairly aggressive version, 15 or 20 minutes a day, where you would do it in the final hour if possible, but in the evenings is also okay. All right, now we also have active trader strategies. We're not going to discuss those tonight. We'll do those in a future webinar, but that is a quick tour of the Education Center and the different things that are available there. So now we're going to get into the Market Scan tool, because we're going to actually apply a couple of different strategies and go looking for some opportunity. The Market Scan tool is really a huge time saver, really gives us an edge to find opportunities before most people. It allows us to scan all the North American markets for stocks meeting strategy requirements. Now you can use the scans that I have created for you. Those are the strategies that I teach in the course material, but you can also develop your own scan. There's 40 or 50 different filters in the Market Scan tool, and it's possible with those filters to build your own scan very specific to what you want. So let's go searching for opportunities. We'll jump back into the Market Scan, or in the website, go to Market Scan, click on Market Scan there. And the first thing that I'm going to show you is the preset scans. So here's all the investor scans for the different strategies. You can see the abnormal breaks, the action breaks, the simple weekly, the Stockscores simple. You'll also see some that I didn't have in the menu there when we were in the Education Center, like the pullback play and the morning movers. We don't use those on a regular basis. The morning movers is actually a way to find abnormal breaks, but in the first hour of the day. So it's just a variety of the abnormal break scan. So what we're going to do tonight is the Stockscores simple strategy. We're going to do it on Canada and the US. So we'll start with Canada. So I selected it, and it automatically populates the filters. And you can see the whole market scan. There's lots of filters there. Let's run the scan. And there's only 4 stocks to look at. So it was a pretty quiet day today. And so I don't imagine we're going to see a lot of great opportunity, but you never know. So I'll just bring this stock up here first, just to demonstrate the kind of things that we're looking for. So I would not buy this stock today. The buy signal on this stock came back here in early February. It broke a downward trend line from a rising bottom. These are some of the things I teach you to look for. It's a real penny stock. It's obviously not for everyone, but 25-cent entry point. Today it's at 32, less than 2 months later. It's a pretty good percentage return. And it all started with the action candle that was right back here. All right, so let's go looking for some more. So here's another one. I actually featured this to some of my Stockscores members a few weeks ago on this particular day where I'm hovering my mouse right now. And on that day, it was actually the bottom fishing pattern set up. It broke a downward trend line, built some rising bottoms, broke through resistance. Again, these different concepts that I can teach anyone to understand in an hour or two. And that was at roughly 85 cents. Today, the stock's at 98 cents in less than a month. So it's made, percentage-wise, a pretty good return. I think it probably goes to $1.10 at least. However, I would not buy the stock today. The entry signal was 3 or 4 weeks ago. And to me, right now, it had a pretty good pop today. It went up 14% today. That is the reward for having taken the risk back in early March, where I'm circling there. So I wouldn't, again, buy that today, but it's something that if you did buy it back then, it's a good hold. And so far, it's doing quite well. So I haven't seen anything that I really like right now. None of those are great. So let's go do that same scan on the US side, and let's see if we have something that's more timely, something that we can consider right now. So I'm going to select the Abnormal Breaks US. Oh, sorry, not abnormal. We're doing the Stockscores Simple. Stockscores Simple US and run the scan. 32 stocks to look at. You can see how fast this is. It went through 7,000 stocks in our database there and picked out 32 that meet the requirements. And so what I'm going to do now is cycle through these charts and look for good patterns. So this one right here, EDAP, this was a stock we day traded today as well, actually. Very abnormal, traded over 4 million shares when normally it trades less than 1 million. Very abnormal price action, so those things are good. My concern is that it had such a big jump today, it may be more likely to see some profit taking tomorrow. And one of the variables to answer that question is the longer term chart. So I can click on this 3Y, which stands for 3 year. I'm going to click on that. And I can then blow that chart up. And I can see that it's got resistance at the IPO price. I suspect that's the IPO price, around $4.50 a share. And so I like this chart, but I don't love it. I'd like it more if it can pull back for a few days and then start to go up again. But I do not think I would buy this tomorrow. Right now, I would give it a 6 out of 10. If it pulls back for a few days, even a couple of weeks, and then starts to move up and break its pullback, then it gets more interesting because the risk-reward profile of the trade improves. All right, so let's take a look at this one. This is Pixelworks, PXLW. It's got a really good bottom fishing pattern. It broke the downward trend line. This was actually a better day to buy it back late in January, but it's also still quite good now. The upside is somewhat limited. It'll probably get to 5.5 before it gets stuck. It's at $4.30 now, so that's $1.18 in upside. And it's got about 32 cents a share in downside. So we're looking at, 3-4 times the upside for the downside. So that's a good risk-reward trade-off. I'd give this one a 7 out of 10. In other words, when I say 7 out of 10, what I really mean is it's got about a 70% chance of going higher, 30% chance it fails. And that's trading. We're trading a probability game. All right, I don't really like that one today. This JNCE was really nice. This JNCE is very much like Pixelworks is today. JNC was back early in March. Very similar pattern. Just eyeball that one, and then I'll show you the other one again. If we go back up here now to Pixelworks, that right now is very similar to JNCE back here. And I am recording this as a video, so you'll be able to go back and check the video later if you want. But I wouldn't buy JNC now. It's gone up $1.25 since the entry signal. So that's better than 20% already. Good hold if you own that one. This one, the entry signal on this one was right here. That was our action candle day. Don't really like that, don't like that. So I can cycle through these pretty quickly, and it does take some practice. I have to teach you what to look for, and in time you can see the patterns and know what to look for. Most people, when they start out, are not fussy enough. So one of the things I do for my students is allow them to send me their stock picks so that I can give them some feedback on those picks, because I don't want people to make bad judgments just because they've misunderstood a rule or something like that. And it takes practice. And so if you get some feedback from me about the stock you're considering, sometimes that can be a huge help. So still don't see anything else that I like. So far, just the Pixelworks that looked good. We're going to run through the rest of these charts. We're almost done. Okay, that's it. So let's go back to the market scan and let's run a different one. Let's run the abnormal break scan. Actually, we're going to run action breaks, action candle breaks right there. So we'll do that one. It's kind of one of my favorite strategies right now. Found 18 stocks. And this looks for quite a different pattern, so we should see a few different ones. This BTCS, if it had closed better, it's a real penny stock. It's under 3 cents. If it had closed better, it would be okay, but it really had a weak close, so I don't like that. There is some money coming into some of these Bitcoin stocks. Bitcoin had a pretty good jump yesterday, and so you're seeing some money flowing in there. I don't think it's going to last. I don't love the pattern. Let's keep looking here, see if there's anything worth mentioning. Now you'll notice I'm going through this pretty fast. When you first start out, you're not going to be this quick. It takes some practice. But with practice, like all things, it becomes pretty easy. And pretty soon that process that should take 15 minutes a day takes 2 minutes a day. I can go through the whole market in 2 or 3 minutes, as can someone who's been doing this for a little while. All right, well, I don't really see anything there that I like. So we've run a few market scans on the US and Canada, and really just found one really good looking chart today, and that's Pixelworks. It's a 7 out of 10. I wouldn't say it's great. It's not an 8 out of 10. I never give stocks 9 or 10 out of 10. To me, there's just no such thing as a 90 or 100% likelihood type situation. All right, so that's the market scan tool. Awesome tool, and there's all kinds of different things you can do with it. Let's just build a quick freestyle scan of our own. Let's say you wanted to look for stocks listed on the Canadian exchanges that pay a dividend and have a good stock score. So maybe a dividend yield of greater than 2%. You're looking for some income. You're maybe more in retirement. You want a sentiment stock score of at least 60. That's going to produce some healthy charts, having a sentiment score above 60. And we can add in a filter for number of trades of at least 500 so that we can be sure that it's fairly actively traded. And there's 58 stocks that meet those criteria. And then I can go through those and assess their pattern. Chorus Entertainment looks pretty good. Pays a 4% yield, historically anyway. And it's broken its downward trend line, starting to move up. I think that's a good stock for that retirement portfolio. If it's an RRSP or TFSA, that kind of thing for Canadians, that's a good choice. And of course, we could run the same strategy on the US market. Here's Superior Plus, plays a 6% yield. That's almost scary how high that one is. I'd be a little worried whether it's safe, but the chart pattern is pretty nice. I think that stock more likely to go higher than lower, and it's going to pay you that yield. So you can see that there's many different ways to use this. I'm only touching or scratching the surface, but it's such a huge time saver because you can go through an entire market in minutes using this filtering tool. All right, so let's get back into this. Talk quickly about some upcoming events before we get into your stock questions and the different education options that we have. And so I want you to start thinking about stocks that you want me to analyze for you. I won't be able to do every one. We've got a lot of people in the webinar tonight, but I will do as many as I can. So we've got some events coming up, lots of webinars. After this webinar, I invite you to go back to the website, go to Trader Training, Upcoming Events, and just go down the page a little bit. Here's tonight's webinar, How I Search for Stock Investing Opportunities, but there's a day trade review next week on Tuesday. I will go through the day trades of the day and go a little bit more into how much you can make day trading, the processes, the tools you need, that sort of thing. For those that are in Calgary, I'm going to do a live presentation. I haven't done a live presentation in 5 years. And so I'm actually going to hop on a plane and just like old times, go back and meet some of you. I've known some of you in the last 5 years just from email. And so this will be a great chance for me to actually meet you face to face. So we're doing that in Calgary on Wednesday, April 17th. That's 7 p.m. Mountain Time. And you just have to register online. Now, it's a bit goofy. When you click on this register online button, you'll fill out this. fill it all in, and then you click on register, and it'll loop you right back to the Stockscores website, and it'll feel like you didn't get registered, but you did. It's just the way the thing works. And we will send you a confirmation email about a week before the event. My stock trading strategies, I'm going to go through different strategies on Saturday, April 20th. How to be a successful stock investor on the 22nd of April. Another live presentation, this one in Vancouver, on Tuesday, April 23rd from 7 till 8:30. Day trading focused presentation on Wednesday, April 24th. Overview of our courses on the 25th, that sort of thing. So they're all there. I invite you to check those out and register for some of those. Another good resource for you to learn some stuff, especially if you're just starting out or you want to have some of my market analysis, is go to YouTube and search for Stockscores, because we've got a YouTube channel. So if I go to youtube.com and then go to search, just do Stockscores, and there you go. And you can see the Stockscores channel, and there are, I think, probably a couple hundred videos up here, and lots of different topics. So I encourage you to go through those if you want to get your learning going. It's a great resource for that. And it's all free on YouTube. So, all right. So let's say you want to take it to a higher level. You really want to learn my strategies. I've spent 30 years trading, and there's a lot of knowledge in those strategies. I've made every mistake in the book, and I can save you a lot of time and money trying to figure it on your own, because I've done it already. And so when I started trading, there really wasn't any good resources for learning. There wasn't very many books on stock trading. Again, we're going back 30 years. And there wasn't much in the way of courses or software. I mean, the internet was pretty young. And so I had to figure it out myself. It took me 8 years to figure it out. I don't want it to take you 8 years to figure out how to invest. And so I've created educational packages, online courses. The Stockscores Investor course is kind of what we looked at tonight, focused on that person that doesn't want to day trade or swing trade. The Stockscores Active Trader course is for the person who wants to day and swing trade. And I'll talk about that course next week and Tuesday's presentation. And then again, for the first time in 5 years, I'm going to teach a live class in May. And so the process is you do the online training between now and May, and then you come to that live class in May 4th, I think, in Calgary, and May 11th in Vancouver. Might have those backwards. I'm pretty sure that's what it is. Yeah, May 4th in Calgary, yeah. And then May 11th in Vancouver. If you can't come to one of those live classes, I'm going to record that, full day of live training, which we'll do at the universities. I'll record it as a video, and it will be available as a complement to the course. So the pricing of the courses is as follows. The investor course is Canadian dollars 2,495. Active trader course, Canadian 3,495. If you took the investor course 2 years ago, you can upgrade to the active trader for $1,250. And if you take the investor course and you also want to come to the live class in May, it's a $495 upgrade. If you want to just watch the video version of it, it's a $395 upgrade. In order to do, this is very important, in order to do the Focus Live class in May, you have to do the investor or active trader course first. So you can't come to that live training unless you've already done the investor or active trader course. So you could do the investor or the active trader course anytime between now and May 4th, and then you can come to that live class in May. It will be me basically holding your hand through the learning process. We actually start with a couple of online webinars the week prior. We're going to do I think a Wednesday night and a Thursday night, and then on the Saturday we're going to do the live class. So I've got some emails that will go out about this for anyone that's interested. And I think what we'll do now is actually pop up that poll. This is a good time. And again, if you have some stocks that you want me to take a look at, you can punch in the symbols. Just let me know what exchange they're on. I need to know if it's the Toronto Stock Exchange, the Venture, or a US exchange. But what I'm going to do now is just post a poll here for 10 seconds. If you want some follow-up information on the different courses that I offer, just answer this accordingly. I'll leave that up for 10 or 15 seconds. and then we'll continue on with those stock questions. So one question that's coming up now, which I'll ask while the poll is up, is the stock you mentioned as being a 7 out of 10, where exactly is the entry point? So the entry point is at today's close. And he makes the point that many stocks will pull back after the break. That's true. I would say 60% of the time, stocks that make those breakouts will pull back for a few days. However, the best performing stocks usually don't pull back. And so if you wait for the pullback, you kind of have the possibility of getting left in the dust on the very best trades. So you can approach it two ways. One, you can take half a position on the entry candle, which again for Pixelworks was today. You buy it tomorrow, it's no big deal. Or you buy the whole position, or you can buy half a position and then wait for a pullback for the other half, or you can just buy the full position. I tend to just buy the stock when I see the entry candle. I don't wait for pullbacks because, again, the best performers often don't pull back, and so I don't want to miss out on those. All right, so I'm going to close down this poll. Thank you for answering, for those that have, and let's continue on with tonight's itinerary. If you want to learn more about the course, I'll just show you where to go. Just go to the Stockscores website again. Sorry, I got to get back to it here. So go to the Stockscores website, Trader Training, Learn How to Trade. If you go to that page, there's a few different videos on here, as well as a lot more detail regarding what these courses cover. So it's a good place to take a look. I do talk about the mentorship here. I don't have a mentorship planned right now. I just finished a run with the mentorship group. Mentorship is a 12-week program where I sort of hold your hand through the learning process. And I may start that up again in the fall. I don't usually do it through the summer. And again, tonight's presentation is recorded as a video. And so if you registered for tonight's presentation, I will email you a link to the video probably tomorrow. It'll take a little while to compile the video. All right, so let's take a look at some of these stocks you're asking me about. And there's quite a few. So again, I probably won't get to all of them, but I'll do my best to look at some. I just have to move my mouse up here. Just bear with me. I got to read these. And I'll try to answer any other questions as I can. All right, so analysis of T.LUN. So this is Lundin Mining, T.LUN. And I would say this is a hold. I don't consider it a great buy right now. It doesn't really have a great pattern. It's still in a downward trend. It is building rising bottoms, so there is some optimism coming. But until it can break that downward trend line, and you can visualize here, normally I would draw it for you, but my drawing tool isn't working. If you were to just draw a line across these tops, see how we're below that still? So I'd like to see it get up through $7 before I'd get too interested in it. Next question, some Canadian stocks, or I'm just trying to get my mouse in the right position here. Why is my mouse not moving across the screen? Weird. There we go. Okay. So these are Canadian market stocks. I don't know if it's Venture or TSX. I'll just have to guess. T.KNT. No, it must be the Venture. KNT on the Venture. There we go. Good hold. This stock started its upward trend late in December. Had what's called a pennant break here early February. An ascending triangle pattern break there in March. I can teach you all these patterns. They're pretty easy once you practice. Those were all the entry points on that chart. I would not buy it now unless you already have the position. To me, it's just a hold, but good looking chart. No reason to sell it yet. It's got an upward trend line with support maybe around about 130. So if it fell down below 130, I'd get a little concerned. V.CR. Nope, T.CR. Crew Energy. I like this. It looks like it's making a long-term turnaround. I'm going to make this a 3-year chart just to see. Yeah, I wouldn't say it's terrific. I'd give it probably a 6 out of 10. More likely to go higher than lower. The entry point, using my bottom fishing strategy was back here first week of March. So that was really the buy point at $1.05. It's now at $1.20, so it's made some decent gains already. I think it's a hold to enter here. The reason I say it's not bad to enter is it's breaking from a little flag pattern. But, you know, again, I give it a 6 out of 10. Next question is BPTH. So BPTH was a really hot stock that we day traded a few weeks ago. You can see the big jump there. So there's the action candle. Had a huge run, went from, you know, the entry point here at about $8 up to over $70. And then typical is it's kind of dying off. I think until it starts to build some rising bottoms, what I would do with this one is I'd watch the intraday chart. I'd like to see it start to move up through 21 with some volume again. Right now it kind of looks like dead money, but it could come alive anytime, so don't take your eyes off of it. It's just for now, I think a stock best avoided. That could change tomorrow. Next one, CLE on Toronto, T.CLE. Now you'll notice I do this, must be Venture CLE. Yes. This is just too hard to read. There's no pattern there. It looks like a dead stock. I don't see any reason to buy this. And, you know, it's so low now, I don't really think you would want to sell it either if you own it. But there's no sign of life there. I think it's in intensive care of that stock. So would avoid that generally until it can show some life. So I'll read this question. You ran an abnormal scan and you see abnormal price action and volume with a good chart pattern. The price action is quite high, which may indicate a pullback before it takes off. Is there a rule of thumb for determining if you should wait for the flag pattern break to increase your profit potential? Well, the rule of thumb is you have to assess the risk-reward potential. And so if it has less than 2-to-1 risk-reward potential because it had such a big jump, then I would wait for a pullback so that you can see an improvement in the risk-reward potential. Now, again, if you haven't taken my course material, some of that may sound like jibber-jabber. Believe me, it's not that complicated. The other thing to think about is how stable it was into the close. So if it was the breakout day and it was ramping up into the close, in other words, going straight up into the close, I'd be pretty cautious about chasing that. I prefer stocks that are more stable into the close. They have less chance of pulling back. So those are some of the things that I look for. All right, so next stock question is V.AXE. So looking at this chart, I don't see any good reason to buy it. Just assess the longer term chart. It's trying to break its downward trend line. If I drew a line across these tops, it's trying to break that. It hasn't done it yet. It got up to 22 cents, which is where the downward trend line is, and it got stuck. So for me, I'd like to see it break that downward trend line, get up through 24 cents a share, and it needs to have some volume coming in. It's just a real lack of volume right now. It's not very liquid. Let's just take a look at the volume traded today. Yeah, it only traded 1,500 shares today on one trade. So it's a stock that sort of trades by appointment. You need to call up a friend to get someone to buy it from you, and that's always a problem. So those kinds of stocks I'm not too enamored with because it's just too hard to move in and out of them. Again, that can change tomorrow. This company gets something going and gets people excited, the volume will come, but there's no sign of life right now, and so I would avoid this stock. Okay, I'll take a few more here. CPG on Toronto. So this is Crescent Point, T.CPG. So it's building what's called a head and shoulders bottom pattern. There's a shoulder, a head, and a shoulder. It needs to break through this, what they call the neckline, which is about 470. I think until it can get up through 470 with some volume, I would avoid it. But it is building a promising pattern. It just needs to make that break. I will do three more. VET.TO. Sorry, T.VET. On Stockscores, if you want to list Canadian stock, put T dot in front of the symbol for the Toronto Stock Exchange. If it's on the Venture, put a V dot in front of the symbol. So this one, another energy name, they all have a similar pattern. They've broken their downward trends. They're starting to build some optimism, but they're lacking excitement. And if you watch my Market Minutes video on the Stockscores YouTube channel, you'll know that I've been saying that the energy sector is trying to to show life, but it really hasn't done so yet. And so I've been still pretty cautious because particularly the Canadian energy names, they're still not showing that excitement that I like to see, that abnormal buying that shows that some of those large investors are excited. And that's the case here, is you just don't see that excitement. It's not a terrible chart. It's building some optimism, but it lacks the signal that something has investors excited. Okay, take a look at this one, T.TV. So that made a little break yesterday. Let's just take a look. Oh yeah, Trevally Mining. I found this one also. Yeah, I like this. I don't think it's perfect, but this little break here is promising. I wish volume was a little higher. I'd give this a 6 out of 10. So 60% chance that it goes higher from here. It's had a really dismal performance, but it does look like it's trying to bottom. All right, so I'm sorry, I know there's a lot of stock questions here, and I'm not going to be able to get to them all. I'm just going to see if there's any U.S. listed stocks that have been posted. Here's one, ABBV. So let's take a look at that, just to remind everyone that we cover all North American markets. All right, so ABBV had some price action today, which was good, but no volume to support it, still below the downward trend line. And so I'd give this a 5 out of 10. 50% chance it goes higher. Not awesome. Okay, I said I was going to do 3 more. I've done 4 more. I'm trying to get my mouse to move across the screen. Oh, there we go. See if there's any other. Would you buy TRST and VFF at their current levels? I don't. Well, let's take a look at VFF first. So VFF, it's listed in the US as well as VFF. I would not buy it here, no. In fact, I'd be watching very closely for a sell signal. And then TRST. There's no sell signal, by the way, on Village Farms VFF, and I would not buy TRST either. I'll do one more. T.ZWU. And if I missed yours, I apologize. I just like to keep the presentation on time, and we're running out of time. So, covered call utilities. Never heard of this one before. I don't think I would buy this here. It's coming into a lot of resistance at 14. So if you own it, I don't see a reason to sell it, but I don't think I would buy it there. All right, so I'm going to wrap that up. I'm just going to see if there's any more general questions beyond stock questions. So someone asking, you mentioned scaling into an active trade today. What do you mean by that? So what I mean by that is adding to my position. So this person is asking me about, I scaled it into a few stocks, but the main one was Facebook. So I'll just show you. That's kind of an interesting comment or a question to look at. So let's just take a look at Facebook, which was my most profitable trade today, but it was a pretty quiet day today. So Facebook I bought right here, and then I bought more here, and I bought more here, and I bought more here. I actually scaled into it 5 times, and the reason why is because it was working. And so when I have a trade where I'm right, I buy more. As long as I can buy more at higher prices, and that seems counterintuitive, but I only want to buy at higher prices because that shows me that I'm right. If the stock is moving to lower prices, then I'm wrong, and so I don't want to buy more of a stock at lower price. So when it's working and the trade is working, then I'll buy more. And so what that did is, instead of earning on this trade my initial entry point, which was down here at the open, that trade earned 3 RR, so it earned reward for risk of 3. But my trade ultimately made, I think, 11 or 12 RR. So instead of earning 3, I earned 11 or 12, and the reason is because I kept adding to my position. So it's a great way to improve your profitability when you're right, when you get the right entry points and that sort of thing. It's a great way to grow those profits, and so that's something I like to do. How much do you charge for membership for the platform? Well, if you have taken the Active Trader course or the Investor course, then using the platform is $300 a year. The platform is not available unless you take one of those courses. I believe it or not, and this may sound silly, but I don't want a lot of customers. I don't want to have a lot of people using this because it takes the opportunity away. And so for those that that want to use the tool, it's tremendously powerful. I think it's well worth the money. But if I gave it away for a really low price or something like that, then we'd have thousands of users, and that kind of takes away the opportunity. So I like it to be kind of an exclusive club. All right, so I'm going to wrap it up there. I want to thank you all for joining me tonight. And again, I have recorded this presentation as a video. And so because you are registered, you will receive a link to the video. And that should come out tomorrow. So thank you all for joining me tonight, and have a great rest of the evening. And hopefully we'll see you at next weekend or next week's presentation on Tuesday, where we'll talk a little bit more about day trading. Have a good night, everyone.